just make sure we're all muted there. Mute. Michael, I wrote you a message in the chat as well there if you want to see it. It's a private message. I wrote you one in the chat there. Okay. First and foremost, normally I do the homework on Friday. Didn't do it this past Friday, but I will do it today. I will respond to the homework today as long as it's in before that. Shout out to everybody who actually did the tests as well. Quite a few 100%, and the rest were all in the 80s, so that is good. Of course, the first one is the easiest one. Myself and Kaylin said, you know what, let's make it easy on the first one. We'll make it worse on the second one. Right? Rope them in. If we make it too hard on the first one, they won't come back. Right? They won't come back on the second one and third one. So made it easy. And we're gonna make it harder from going on from here. Some of you try and cheat as well by doing it twice. We can see when you use two different emails, right? We can see it. So just letting you know, you can't hide that, right? So let's try and do it once and be real about what that score is. But yeah, it was a good first test. Well done on you guys doing it, especially if it's something that you have done before but are willing to go through it again and do it. That's always good. And then lastly, why I didn't actually do the actual outlook? And you guys might, I don't know, I was on Saturday, but I wasn't fully 100% there, so that's why I jumped off early. So I'm just letting you guys know that I wasn't too much in a good space. This is family, yes. I feel like I can talk freely. Just let me know if I shouldn't talk freely. I can also do that. Right? I have to make a joke to make it lighter so that I feel better. No, myself, my wife, and my son, our dog passed away, and we had our dog for 12 years. So that was quite a sad one. That made it even worse is on Saturday. So my son basically has three sets of dogs. Well, three dogs in his life, right? Which is our dog, and then where he used to go before he went to school, his day mom's dog as well, and then my mom's two dogs, but he's scared of the one, so he only likes the small one, right? So, but our dog passed away, and we thought it was like just age because they usually they only like live between 12 to 17 years. But she went quickly. But we did notice that for a few weeks, or even, but the reason it tripped us up is, I'm just giving you a quick backstory. The reason it tripped us up is she was getting older, right? So she was going slower in general. But then in the last 3 weeks, she just went slower and slower and slower. And I kind of anticipated something will happen, but it wasn't gradual until the day she died. It was fast, and then she just died. Um, Kidney failure. But while we were sad about that, we then got a message from his day mom saying his other dog died the day immediately after that as well. So then both of the dogs who he's really close to, my son, it was making me so sad seeing him like that. They died. And then my mom sent a message saying her dogs are ill. So then I was like, something is not, this can't be coincidence. It turns out there's been a major food recall in the city, and it's dog food, and there's been a lot of people who lost their pet because of this. And there's not South Africa is not like the US. We're not going to be able to sue or anything like that. It's just going to be a recall, get your money back for your food. But now we realize that it's likely that our dog was actually being poisoned by that food. We all use a certain set of brands, and all of the four brands have been tainted by the same factory. And the reason we know that it is that is the other dog that my son knows. Their owners are actually work in a lab, and they had the food tested, and then they said the food is poisonous. And then I went online, did some research, and saw that in November, last month, There was a major nationwide food recall, but it wasn't even on television or anything, right? So that's what happened. So that's why I wasn't in that space of mind. Today was also different because now I'm so used to doing things because the dog's with me all the time. And now, but yeah, that's what was going on. My mom, we stopped the food immediately. So she just happened to only open this new bag of food last week. So they didn't get it long. Our dog had it almost a month. We have a small dog, so it's a big bag of food. And then the other dog also had it almost a month. So that's what the difference is. Yeah. Anyhow, thank you. Thank you, everybody. You know what the Bible says? Not all of us are animal people, maybe, but the Bible says in Proverbs, a good man, a righteous man regards his animal. That's what scripture says. So we have to take care of our animals and stuff as well. We have to take care of the pets that's been entrusted to us, right? And yeah, our dog is definitely family. She was me and my wife like drove very very far to get her in the first place, and she's been like, we have a small, just a Dutch one, so it's a small sausage dog, so she's like on everything, in the bed, everywhere. It's just like, down, they wiggle their ways into everything. So yeah, we still dealing with that. I just heard my son walking from school a few moments ago say he wish the dog was still here, so that hit me a bit. But all things work together for the good of those who love the Lord, right? All means all. And even in these uh, hard times and stuff, we have to think that something, God knows best. That's all I'll say. God knows best. So that's why a bit of a delay on that. But I'll get on it today. I just turned my phone off yesterday as well. Didn't want to really speak to too much people. But we're back on it. Okay, thank you, everybody. That's just, I always feel that it's important to be open and forthcoming as to, if you didn't hear from me, now you know exactly why you didn't hear from me, right? My son's going to his day mom tomorrow, so that's going to start all over again, where he realizes his other dog is gone. Yeah. Thank you. Okay. We're going to get started today. And we are in Lead Market Mastery 2.0, code number 1, where we get to do homework and we get to do tests as well, right? So you said Trent says get another one. Don't put yourself and family through the pain. Ish. It's harder this time, eh? Like I felt for like yesterday, I felt like I never want a dog again. That's how I felt, But I'm sure we'll get there one day again. Okay. So again, shout out if you joined late. Thank you for doing the homework and things. We appreciate it. And thank you for doing the tests. And many 100% scores there. So that's pretty good. That means you guys actually went through the slides, went back, looked at the answers, because I hid it specifically from you in that first one of the slides. I didn't have an exact example. So well done on that, even with the homework as well. Well done on that. We'll go through it. If you're new and you're feeling like it's a bit overwhelming and stuff, it gets better as it goes along, right? And also, as we go along, we'll be unlocking the previous cohorts for you, so you can go and look at what was done before as well. All right, so have a look at that. Matt, can we get your full name, sir, please? Just your full name in the chat there is what my admin's asked, or typed in your name as well, so my admin's asking. And she'll communicate with you in the chat as well. Thank you. Okay, let's get going. So, house rules real quick. Cameras on at all times. Please turn your camera on at the start of class at Fastest Community. And we want to see what you're eating today, right? We want to make sure that what you're eating is something you're sharing with us all. Questions and comments at the end to protect the teaching flow. and respect everyone's time. So save your question until the end. Please go ahead and write your questions down on a piece of paper as we go along. I don't mind going back to that slide, but I want you to actually write them down so that we can go over them at the end, right? Engage. You can engage in the chat. You can engage. At the end, we'll have discussion. If you're new, don't feel like you have to sit on the sidelines, be quiet. You pay to be here, so open your mouth. Empty mouths don't get fed. So please ask those questions, right? Okay, good. And then my favorite verse. So if you guys were in Saturday's class, Timothy has got his verse. My favorite verse here is, therefore, every scribe who's been trained in the kingdom of heaven is like a master of a house who brings out of his treasure both what is old and what is new and what is old. So what you're getting from me now is new will eventually become your old, and you will bring your new, right? That's the plan. And someone's saying, I refuse that, and they scribble on my screen. Thank you for that, right? Someone's saying, I rebuke that with a yellow pen. I'll clear. No worries. That's probably a mistake. Just kidding. Okay, so we're doing, should say module 3 there in the corner top. Let me just change that. 1 second. It says module 3 at the bottom, but it says module 2 on top. And that's a mistake. And going back over there. So learning objectives for module 3 today is we're going to look at the price delivery within a master pattern. We're going to look at the basics of bias anticipation. So we're building on that other idea, right? We can look at the importance of candle closures. Who remembers to actually look where their candles closed, right? Especially on the higher time frame. We can look at POI validation, swing point validation, and then swing point formation at API, right? And swing points are very important, everyone, because that's essentially what we are trading. Every market reversal, turnaround, continuation, all of them have a swing point, right? And the swing point is that 3 candle formation, sometimes 4, sometimes 5, as they leave away from there. The elements of a master pattern, we covered a bit of this in the other session. What are the elements of a master pattern? The master pattern holds all the price delivery secrets, but there's this 4 kind of like hierarchy things that develop within a master pattern that we need to look at, and we trade from, and we utilize to understand where the market's going next. Every master pattern has the above elements in it, and we must validate each one of them. So, Joseph, I turned my phone back on today and saw that you had a question about validation, and the answer is yes. I don't think you were here in the beginning to know why I was actually off for a while, but if you were, then you'll catch that again. So the answer is yes, we have to validate them, right? Fair value gap is a 3 candle formation where the wicks of the candle number 1 and candle number 3 do not cover the same area in price action. This is a repetition. OCR or OCs, you will hear them spoken about. It's either a opposing candle or many opposing candles is an opposing candle range. A candle or candles that is in the opposite direction of the anticipated move. We see this as support to price when we have direction correct. So there's a simple explanation, right? If we're trying to figure out what is our OC, make sure that whenever you have an OC on, that it is the opposite direction of what you wanted the move to be. Whether you're right on that move or wrong, right? The way to make sure you're always looking for the correct OCs is it must be in the opposite direction of your anticipated move. So if you expected price to drop down, you should be looking for OCs that rose up, right? That are green. So always have it in the opposite direction of what you expected price to go, where you expected price to go. Swing highs and swing lows, swing points in the market that consist also of 3 candles, kind of a theme here, where the middle candle is higher, that's a swing high, or lower, that's a swing low, than the candles on either side of it. So it's 3 candles, and the center candle is higher in terms of a swing high than the candles on either side of it, or it's lower in terms of a swing low than the candles on either side of it. And that becomes a crucial concept going forward. Even though it's a POI, it is also how we trade from POIs. And then consolidations or sideways markets are simply just stacked highs and stacked lows, ranging price with no clear direction, right? With no clear direction. We don't know which way it's going to go. Okay? Okay, no problem. Thank you, Kaylin. So those are the components. Now, here's the basics for bias in every market candle, 1 to 4, sometimes 5. Mainly we focus on those 3 initial candles, right? As depicted over here, what you see on the left, right, is a 3 candle formation master pattern on a higher time frame. When that is fractalized down to a lower time frame, and this lower time frame here could be a medium time frame or a lower than medium time frame, right? It's simply just lower than that time frame. This is what you see when you see that, right? On a higher time frame. And then also the inverse is obviously true. When you get candle 1, candle 2, candle 3, and candle 4, what you see on the other side of the market is this master pattern forming down. So this is a lower time frame master pattern, and that's just a 3 candle, 4 candle master pattern, right? They both are master patterns in their own right, and they both can be part of greater and larger master patterns. But with the one is a higher time frame scaled up version, and the other one is a lower time frame zoomed in version. Everybody with me? Right? So if you find this on a higher time frame, Brendan, and you just go down 2 or 3 time frames, that's what you'll see. Right? We want to memorize that. And then here's the simplest way to find out what bias is. And I had people do an exercise on this on your own charts. And maybe this is something you can do as well. Go and do an exercise on this and see how many times you get it correct. In fact, go to a higher time frame, press the replay button on your trading view, and then just replay it back maybe a couple of months or so, and just try and guess what the next candle will be based on these rules I give you here today. Will it be a green candle or will it be a red candle, right? And then see, mark off the times you get it right and the times you get it wrong, and see percentage-wise how many times you were able to guess it correct. When I did it on the live with everybody, I got 80% of the time it was correct. When others did it on their own, they got 60%, 70%, even over 70%. So don't forget this basic bias rule that helps you determine where that next candle will go. If you're scalping, you can also do this, right? On a lower time frame, maybe as an hour or as a 4-hour, trade within the framework of where the next 4-hour candle will go, where the next hour will go, and make sure that your lower time frames agree with that. In fact, the best trade you'll see, and I'll explain this now, is when your higher time frame, such as your daily, says it's got to go up next. You go to your 1 hour, it's got to go up next, and even your 4 hours says the same thing. Then scalping is easy, swing trading is easy, and intraday trading is easy at that point. Okay. So basic daily bias over here expanded. On the top of the chart, you see what is called a PDH and a PDL, right? That just means previous day high. That could also be previous week's high, could also mean previous month's high. It's all fractal, could also mean previous 4-hour high, right? But the daily being the granddaddy of all time frames in terms of direction and clarity, we're just calling it previous day's high on this particular one. Now, looking at this first example here on the left, we see a green candle followed by another green candle that hasn't quite taken out the high of the previous candle, but has gone and closed over, right, the close of the previous candle. When that happens, most times the expectation is the next candle will go up, right? Go and test it on the chart. Now, it will continuously do this until it gets at a POI, then it will change. Also, for your notes, when looking at the daily, generally, right, the daily will follow through with at least 3 candles in the same direction. After that third candle, if price has reached a POI, it will almost certainly pull back, right? There's something about the daily. And why does it do that? Because you got to think about the open, high, low close of a weekly candle, right? If you want to understand the daily, you look at the open, high, low close of a weekly. Monday and Tuesday might put in the low. Friday might close off from the high. That's why you get that 3 candles might go in the same direction. But then after that, one of them pull back or so. So have a look at that, right? Okay. We expect if this is the daily candle, the next candle to go up that way, right? And go there. And there's some logic behind this, which we'll speak more about when it comes to the open, high, low close of a candle, which tells you that how you should expect the next candle to do it. And I'll drop a hint here quickly, but if I expect these 2 candles look like this, and I expect the next candle to go and take out this high, then before I take that next candle trade, I first want to see it fall down, then go up. Because every wick in a candle means that the candle goes the opposite direction first before it goes its general way. That in itself should tell you something. If you ever want to buy at the best particular point or sell at the best particular point in a market, sell while you're in the wick, right? Because that's the opposite direction that the market goes first before going the correct direction, or buy while you're in the wick, right? How do you know that? How will you know when the wick is done or when the wick has been completed? Simple. If you're taking notes, you look at the open price of a candle. When price comes back up and closes over it, the wick is done most times. And when it will continue after that in that other direction, right? Now, if we have this scenario, and this is important to remember, this candle over here, by the way, can change color, and it's ideally, if it's a red candle, it will be better. But this also works from time to time, right? So you get a green candle, and you get a candle right next to it that closes inside of the range of the previous candle. So in other words, it's taken out that high, then closed down. A rejection of that type usually means that the next candle will be down. Does it mean that it's going to continue down forever? No. But the next candle would likely be down. I hope that everybody is still thinking before they take a trade. If I get into this trade, is the next 4 hour, the next daily, is the next 1 hour likely going to go up? If you're not doing that, you're missing a crucial step, because that is basic bias, right? You want that alignment that the next candle must go up or the next candle must go down. So you're going to buy if the next candle is going up, sell if the next candle is going down. The same is true with the inverse for the selling scenario. If we have a red candle down over here and the next candle closes beyond the close of that candle, but doesn't take out the low of that candle, right? And we're referring to candle lows here now and not swing lows. Then we could expect that the candle following that is going to go down, and we want to be traders inside of that candle, right? And of course, this one is also true. When price goes down below the low of the previous candle, especially at the POI, closes up inside of the range of the previous candle, the expectation should be that the next candle will go up, right? And the idea behind this is you take a higher time frame directional idea paired with a lower time frame entry idea, and then you capture the range of this candle going up, right? And so here's an example of candle closures. Each time the candle closes past the low of the previous candle, we can usually expect the next candle to go that same direction, right? And then each time it closes again below the low of the next candle, we can expect the next candle to go in that same direction. When does this fail, or when does this change? This changes when they hit a POI. What is a POI? An FEG, a high or a low, an OC on a higher time frame, right? Once it hits that on the higher time frame, and what is the higher time frame? The same time frame on which you are looking at this. So if you're looking, if your highest time frame is a daily, then this FEG must also be on a daily, right? If your highest time frame is the weekly, then this FEG must also be on a weekly. So on the same time frame, right? And then I've just made another example here. A close beyond the low of a high of a previous candle signals direction until the POI is reached, right? As you can see, every time we close higher, we go higher. Every time we close lower, we go lower. And again, this is a higher time frame. You capitalize on it inside of the lower time frame scenario. Now, this is generally what the market will do, right? It's going to reverse off of these and continue down on these. That becomes a continuation setup. And the next one here becomes a reversal setup. But where does these things end, right? Where candle closes matters, right? The way a higher time frame candle closes reveals important market sentiment. A bullish candle close above the high of a previous candle typically indicates continued upward momentum, suggesting that the next candle may also be bullish. And in the inverse, conversely, a bearish close below the low of the previous candle often signals sustained downward pressure, implying that the next candle is likely also to be bearish. But this ends at some point. And here's the example of when it ends. As this takes out the low of the previous candle right next to it, it is inclined to then go up. So price goes up and closes above the previous candle. So what do we expect of the next one? Also to go up, and it does. Closes above the previous candle. What do we expect of the next one? Also to go up, and it does. But this one creates a reversal at the high. Why is it doing that? Because it now hit a POI, a previous day's, I should say previous day's high, previous day's high, previous week's high, or previous month's high at that particular point, right? Once it goes above that and pulls back in the range, then we can expect downward price action until the next POI. Now it's ran through this FEG over here and gone into the next low. And then what does price do? Turn back. A crucial thing about this particular drawing over here, again, is that it has to be on the same time frame, right? If here is a high on the daily, then these two candles must have fully closed on the daily, right? Not on a 1 hour or something else or 4 hour, on the daily. And then we capitalize out of these over here, right? Everybody with me? Thumbs up if you are. Okay. Good, good, good. Now, here's your validations of all those POIs. We worked on that a little bit last week, but now you're seeing it inside of this master pattern and what validates these various POIs and what makes them usable in the context. Again, we want to point out the fact that this smaller time frame master pattern, which is a consolidation with a minimum of 2 drops down, 2 expansions down, consolidation, 2 expansions down, a turnaround, and a target of that original consolidation over there, right? That master pattern is also this 3 candle pattern, right? On a higher time frame. So if you were to bump up the time frames, you'll see that on a higher time frame. Now, starting at number 1, as you can see, they correspond to the numbers on the actual chart. At number 1, we have a consolidation. High of the consolidation is taken on the asset or on a correlated asset. We'll speak more about that at a later stage. Wait for the higher low to be taken before engaging, right? Number 2 is a valid FEG. Why is that FEG valid? Because it was produced after liquidity was taken. This run up above that consolidation high is what causes this FEG to be valid and for us to trade from it, right? If we are going to trade from it, though, we need to understand that this year needs to happen on the same time frame as the FEG was created on. And then number 3 is a valid OC. Why? We expected price to go down, right? If we expect price to go down, then OCs are the price action that is running up. it is opposing what we expect it to do. If we think price is going to go down, the OCs are the ones running up. Crucial note, if you're new, OCs are not marked at the wicks. They are marked at the opens, right, of candles. Opens, there. Not there, at the opens. That's the sensitive part. Okay? So what makes number 3 valid? The open of the lowest green candle body validates the OC in the candle. So I'm trying to show you there, right? And what makes it actually valid? It comes from an FEG, right? It comes from an FEG, so it makes that OC valid. It's coming from another POI. And that's a common theme throughout this. POIs are only valid when they come from other POIs, right? That's the simplest way to understand it. A valid OC number 2 in number 4 over here, right? A valid single OC candle because it was created from an FEG. And as you can see, this drop down. So if we expected price to further go down there, the green to the upside is what makes it valid. I'm only drawing it this side of the market because there wasn't space and I didn't want to draw into this. So at the open, we expect price to trade away from that if price comes back and hits it. Now, a clear telltale sign that the market is shifting direction is when price creates an OC to the downside and is immediately followed with an OC to the upside. There is no better sign that the market's going to change direction for a longer period of time. Notice here, OC down, we come back up, hit it, and then go down. OC down, we come back up, break through it. That's a sign of a reversal, right? OC followed by OC break is usually a sign that the market's going to continue in the other direction for a while, okay? Now, number 5 is a swing formation on this lower time frame. What do I mean by that? Candle number 1, right? And candle number 2 and candle number 3, those are the 3 candle formations. But candle number 2 in the center closes in the range of candle number 1, and candle number 2 is the lowest of these 3 candles, making that a swing low. It's a valid swing if candle 2 closed in the range of candle number 1 and trades through a single or series of candles that created the low on the respective medium time frame. So this series of candles that created this low gets traded through. That validates this swing point. The run down gets closed through. And where does it get closed through? At the body, because it creates a new OC, right? When that run down gets closed through, it is that creates that valid swing formation. It's a valid OC, but also a valid swing formation as well. Then number 6, we now traded through that, making that, and number 6 is probably the most important signal on across whatever times you're trading, because it's now the validation of the OC and signaling a reversal point. And it's a valid OC series because it took out a low, right? Took out a low over here, 3 candle low, traded through it, then traded up through it again. That sequence makes that a valid OC. Okay. Number 7, although it looks like it's part of something, right? It is not. And I put that in there for a reason. Number 7, if we believe that the market is going up and number 7 does go down, so it's supposed to be the OC, yes, but number 7 doesn't come from anything. It's not in an FEG. It's not in a previous OC, and it's not below a low. Therefore, number 7 is not a valid OC, right? Number 7 is not a valid OC, but number 8, because price has traded through and taken out that low, which is a POI, and then got closed through again. If we're expecting price to go up, we should look at the red candles down. Number 8 becomes valid as an OC because it took out the low before creating that OC. So number 8, yeah, becomes valid. And then number 9 is valid, even though it didn't take out the low, even though it didn't go into an FEG. What it did do is trade into a previous valid OC. And I want to caution about this one. So sometimes we'll see a valid number 9, but a number 8 isn't valid, right? In this one, it is. What I mean by that is number 8, let's say, looked like number 7. Didn't go into anything, but then number 9 came into it and traded away. This is important. It's not valid if it doesn't come from something valid, right? So you can't have a valid number 9 if an 8 is not valid. So 8 is valid because it took out a low and got traded through. 9 is valid because it went into 8, which was valid. Does that make sense? It's a lot of information. Brendan's like, what is this? Right? I'm just kidding. So read this over and over. This slide is very important, gives you all the validations, also shows you how they should look. So yeah, number 9, valid because it traded into the previous OC and then got traded through. Just because it traded in doesn't mean it's valid. It has to be closed through as well to be valid. And then all of this is that, right? And we'll show that more and more as we go along. All of that is this. So moving on, this is important because now we're getting into the concept of looking at that higher time frame, but also investigating it on the lower time frame. So to my newbies, we are going to trade mainly inside of candle number 3 and candle number 4. I have taught how to trade number 2 as well, but that will come a little later. But candle number 3 and candle number 4 is where you're going to trade. But before you trade that, you need to see either one of this on the left, right? So we're looking for a validation of a swing point. This is a validation of a swing point. We're trading the swing point, but we first want to make sure that the swing point in question that we are trading is valid, right? The market can never, ever reverse without a swing point. You don't have any chart. None of you have any chart that you've ever looked at that has a reversal without a swing point. If you find one that has a reversal without a swing point, I'll send you all the money that's in Joseph's bank account today. Right? I'll do it. Just he will. I promise you, we'll get it together. Him and Park will put their money together, and we'll send it through today. Let us know. But no, I'm joking. I'll send you all my money. There is nothing like that. It's impossible. So every market must reverse with a swing point. The key to knowing if a swing point is valid is number 1, must come from a POI. Number 2, it must have a OC validation on the medium or respective time frame, right? So remember, we're looking to trade this higher time frame, but we validate this higher time frame by looking inside of its respective medium time frame. In the previous lesson, I gave you the time frame alignments. So you should know if this on the right is a daily, then I should be looking for this on the 1 hour. Right? It's in those slides. Okay. So what are we looking at here? What is the difference? What is an OC? Since we know that an OC must be present for a swing point even to be considered, we are looking on our medium time frame. And what are we seeing? We're seeing a single or series of candles, in this case 2, that creates the low that got traded through, right? That is enough to tell us, okay, this over here is becoming the swing point, and we can trade it in that direction. Okay. So as you can see over here, I've also got numbers 1, 2, and 3. That 1, 2, and 3 correspond with this 1, 2, and 3. Right? That's what's happening. Now, this is the one that trips people up. And of course, this particular example is working, but if you were to trade this most of the times, you'll probably get stopped out. This swing point here is not the OC, right? It's there. Because all these colors are the same color. It's a single or series of candles, right? Putting in the low. So when they put in the low, inside of candle number 2, which is here, and most swing points get validated inside of candle number 2. But in this particular case, it says validated in candle number 3, so we trade candle number 4. So as a general rule for everyone, after it gets validated, you let that candle that validated it close, and then you trade inside of the next candle, with the exception of what you will learn at the later stage, which is how to trade candle number 2. But for now, We only trade candle number 3 once we've got a validation in candle number 2. And we only trade candle number 4 once we've got a validation inside of candle number 3. Okay? Everyone with me? Okay, so here's how it looks, right? POI validation before, and then afterwards you'll see the after. So remember, we're trying to trade the swing point, and here's a swing point developing at this particular level, right? It says, what is price showing us? We have a H1 POI. We traded into it. This is important. With a H1 candle, not a 5-minute, not a 15-minute, on the same time frame, right? And we rejected it on the same time frame. The candle that rejects and closes in the range of the candle right next to it, right? And we have failure swings on the top. So we trade from swing points or protected swings, you'll learn later, towards failure swings. What are failure swings? Lower highs or higher lows, depending on which direction you're going. But that will also be explained as we go further and further into the session. So there's a lot of, not the session, into this course, there's a lot of repetition in here on purpose, right? There's a lot of repetition in here on purpose. I keep repeating certain things so that you get it as time goes on. So what are you seeing here? We're seeing that price went down, hit the POI, closed in the range of the candle right next to it. And likely because of this is candle number 1. That is candle number 2, which means there's likely a validation inside of candle number 2. And we can trade candle number 3 and candle number 4 and even candle number 5 if there is a candle number 5 all the way up till here, targeting that area. Why? Because that's now a new swing point high. So every POI starts a new phase in price action, which is the next lesson after this one, phases of price, right? But I cannot emphasize this enough. Note that the POI candle closing in the range is on the same time frame. I stress this a lot because we can easily get tripped up to think you can go down early, but you cannot. We wait for all of this to get that trade. Now, if you don't want to wait for this, right, but you know that this is likely to happen, then go down to a lower time frame and just make sure that whatever you see on the lower time frame is also going up, right? Not down. You want it also to agree to the upside. That is the before, and here is the after, right? Now we see price traded in, and what do we get to trade? We get to trade the expansion candles. Candle number 3 and candle number 4 becomes the candles that we trade. Not on this time frame, but on lower time frames. That's where we get the maximum benefit of price running up in that direction. That is from an FEG. Now we move on to what does it look like if we come from an opposing range candle. How do we get an opposing range? Firstly, we expect price to be going up. Therefore, we then consider and look at all the portions of price action that has dropped down. So when we have dropped down and closed through the area, the body of the candle that created that drop down, provided that that OC is valid from the validation rules that I gave you a little earlier, we can now classify that as an OC or an OCR, an opposing candle range. And then what are we looking for? We're looking for that 2-candle formation. So isn't it interesting? This was there from the beginning. For those of you who remember the previous cohort, protected swing plus 3 candle. Protected swing plus 3 candle. See it now? Protected swing, there's your 3 candle. Right? So what do we have? Again, we have that POI, right? Inside of the OC at the bodies. That's important. And then this red candle closes in the range of the candle right next to it, which is a green candle. And this is on the same time frame. This is your before, and this is what your after looks like, right? It is a very expansive point. We get to trade inside of candle number 3, candle number 4, candle number 5. Yes, candle number 6 runs for quite a bit as well, but that would mean that this is likely a 1, 2, 3 candle on a higher time frame, right? That's what's running further. But our general target would have been either this high or that high, because 1, 2, 3, 4, 5, that 5th candle going into this high, and reaching for that high would be where we'd exit, because a high in itself is also a POI. And if we close in the range of this candle right next to it, it might have meant that we might be going down, and we want to avoid that, right? So we target logical places: protected swing, OC, and failure swings we target on the highs. Then we've got the POI validation when it comes to the highs and the lows, right? The POI validation when it comes to the highs and the lows. And in this, we're looking at the same thing. It has to be on the same time frame. We have a swing high, which is a 3-candle formation, 1, 2, 3. We know that a new phase in price action always starts at the POI. This is a POI. And then, of course, this candle closes in the range of the candle right next to it. So that tells us that we're likely to continue in the same direction to the downside. This is the before, and here is the after. We then get involved in candle number 3, candle number 4, candle number 5, as we trade towards these weak areas. Here's in it. This, even though I'm saying to you, we have an H4 POI, I think this was likely on a daily. And here's an example of it: 1, 2, 3 candles, and get a pullback, right? 3 candles in the same direction, and then get a pullback after that. Note that the POI again and the candle closing in the range of the candle right next to it is on the same time frame. Okay, we pasted that one quite good. Homework, 9 p.m. everyone, EST. I saw some sneaky people this time around. 9 p.m. EST. Submitted on the homework tab, and questions belong in the Q&A section. I'll answer those questions today as well. Only related to the education. No, how much must I pay this month? Has my bill been settled? None of that, right? Keep it to the education inside of that, inside of the Q&A. If you want to know where Elizabeth is, send a DM, right? We keep the stuff to the education. So here is your actual homework for this week. Take a screenshot of it so you have it. There is number 1, mark up your valid POIs clearly on the chart. Label each POI as valid. Indicate what type of POI it is. Is it a high? Is it a low? Is it an OC? Is it an FEG? Label candles number 1, candle number 2, candle number 3, and 4. These are the candles leaving the POI. In other words, you want to have your POI visible when you're drawing those ones on, if those are the candles leaving the POI. And then make sure to show that price traded into the POI and that candle number 2 closes within the range of candle number 1. Remember, those colors can be different. Doesn't have to be the same colors as the ones I showed you, as long as it closes in the range of the candle right next to it. And then show at least one example of each POI type you've learned. So we want to see one FEG, one OC, one high or low, right? You're welcome to show multiple examples, but combine them all in one post. So not multiple homework posts, one singular homework post per person. Include your TradingView link in your post so that others can view it as well. If you don't include your TradingView link, it becomes small on our side. But if you include it, they can click it and we can see it bigger. Community engagement is required. Leave a meaningful comment on at least 3 other students' posts. If you don't do this, I'm not answering your homework. All right? So each one, reach one, help one, assist one. All right? Share your feedback, ask questions, and let's grow together. All right? Here's an example for you. This one I'm making a little bit easier. Here's an example for you to do. You can see that this lower time frame master pattern is actually a higher time frame candle number 1, candle number 2, candle number 3, and 4 master pattern. So I separated them like that. And then I showed you an OC, okay, an FEG, another OC, a low getting taken out, all of those POIs on here. The only one I think I'm missing is a high getting taken out on there as well. Okay, everybody with me? Okay, so let's quickly go and look at this on the chart, right? You got your example already. Let's quickly go and look at this at the chart and maybe talk about it again. And then, of course, this is the question and answers and statements section of the class, right? So now we can relax, we can smile, we can ask some questions. Look at Isabel smiling. That's an instant smile. Isabel, we love it. I'm going to go to my trusty Euro USD blank chart because all the others is marked up. So TradingView's got a competition happening there. Today's a slow day. It's a good day to practice. You want a no news day. You know what that means. Choppy price action. Especially if you're on a chart that has had an expansive day in relation to the rest of the week on a Friday, right? And you could say this is a decent candle on a Friday in relation to that. So Fridays are usually smaller. So if that happens, you can sit in your hands and study. Okay. So we've stated before, and it's just a reminder to everyone again, why do we actually trade these swing points, right? Why do we do this? Why not just randomly jumping on anything, right? So if we took a chart like this and you take your chart as well, and you look at every major turning point of the market or energetic move in the market, here's what you'll see, right? Candle closes in the range, there's a candle right next to it. And then what happens? It becomes the low and starts progressing up, right? And then what about this drop down? Before we get that drop down, what happens? There's a singular candle closing in the range of the candle right next to it at the high, and then proceeds to energetically move down. But what about every single major move in between them all? Look at this. There, right? And it goes down. But then we need to know, where does those things happen from? They happen from POIs. What are the POIs? There's a high. Okay, what about this one? There's an FEG. What about that one? There's an FEG as well. So now we know the areas that they happen from and the formation that they happen with. That's why we trade the candles thereafter. Also on this weekly time frame, it can be any time frame. We're looking again, where's the next major move, right? And we could draw the next major move in as candle closing in the range of the candle right next to it, but coming from what? A POI, FEG, right? Here's a slight variant that you'll learn about later in the course. This one doesn't close in the range of the candle right next to it. But what happens in those cases? We simply wait for one more candle. And the next candle thereafter must be green in relation to where you expect price to go, and then price goes up. But this is a phenomenon that happens over and over in the market at every single major swing point. We cannot make this up. There in the range and expands up. And then everything in between as well. There's a big move. There's a big move, right? Here's a big move. There's always this phenomenon that one candle closes in the range of the candle right next to it and then causes the rest of the candles to go in that direction. If you were to go to the extreme of a market, you'll see it there. And if you follow the all-in market right down to the bottom somewhere, you'll see it there. And then, of course, just for good measure, if you didn't believe, you'll see it everywhere a major move actually happened. Now, my existing students, you guys know this already, but I want the newbies to be convinced of it. There, right? There. And I want you to see what happens immediately after that, right? Every time. Isn't that good, Brennan? Right? So that sets up the move every single time, and they're on the same time. And you can see, you can go back. You'll see it everywhere. You go back years, there's it happening. Candle closing in the range with candle right next to it from a 3-candle high, POI. And if you come all the way to the bottom, right before price decides to move, candle closing in the range of the candle right next to it, below a 3-candle low, right? All at a POI before it does that actual move. Now, what we're learning to do, though, is to pair those two things together, pair an OC, like in this example, an OC over here, plus a 3 candle forming from a POI there. OC down, 3 candle there, and we get that trade there for that expansive move. Same over here, OC down, 3 candle there, and we catch that expansive move. Same over here, OC down, 3 candle there, and we catch that expensive move, right? That's the idea. We're trying to capture that over and over and over and over. And then, of course, the next thing is true as well. Now, how do we pair this with lower time frames? Like, let's say we take this example over here. And we simply just erase that candles over there, right? What do we have? We have the POI, the FEG, right? Everybody see that? The FEG to the upside, right? And we have now the candle closing in the range of the candle right next to it. Then we go to what we learned we should be doing based on today's slides, which is go and validate whether or not we have an OC on the respective time frame. It should be a 4-hour, right? And we want to know, is it in candle 1 or candle number 2? And of course, we have an OC here in candle number 2, an easy one, right? Then we know that after that has happened, inside of the new candle, not the old one, the new candle, what do we mean by that? Let me just put the new candle on here, there. Inside of the new candle, if this was a weekly, we want to look for it in the new weekly candle. It's a Sunday there, so I'm skipping the Sunday. I'm going to the Monday. Oops, 4-hour. And inside of the new weekly candle, all we are waiting for is a candle that closes in the range of the candle right next to it, right? Here's a new candle starting. And we're waiting. That is a candle down into a POI. That is a candle down also into a POI, which is under here, under that low. Now we got candle number 1, candle number 2, and candle number 3 closes in the range of candle number 2. Usually we want candle number 1 to close in the range of candle number 2. Then we can set up a trade. But if that doesn't happen, we need candle number 3 to be green. Now, what do we have? This is not the ideal situation because we've got our OC down, but I just want to show something. So we have the higher time frame OC from a POI. Now we have the medium time frame OC from a POI with the same thing, same formation, right? And we expect to get a move there. If it doesn't happen over here, we take the next one, right? Which will happen here. Candle closing in the range of the candle right next to it. Now, I'm just showing you the theory behind it. I'm not talking about why we'd avoid this one, why we'd stay in that one. By the way, none of us should be taking that one because we don't have an OC to the upside plus a 3 candle. We just have an OC down, right? That's for the veteran students. I'm just trying to show why this works even if you get it wrong. So we're out on that first trade. We got stopped out. Right? The first trade is out. Second trade is lost as well. Right? Now, we go below POI. And my veterans, I want you guys to see something I'm going to show you soon. So please pay attention to this particular example over here. We go below that POI, which is a 3 candle low. We don't close in the range of the candle right next to it, meaning we need a third candle green to close. That's that validation concept you learned in the slides, which means we're trading inside of candle number 4. Oops. Okay, so we lost twice already. I'm going to show you something interesting now. Just want this to play out further. Let's see if it's going to come down or go to that TP quickly. And bang, right? So we lost. So when you pay attention, especially My newbies, you'll appreciate this at a later stage, but for the existing students, I want you to see why I told you you need to see the setup that I'm actually wanting you to see, right? Look at this. We add an OC to the upside over here on the higher time frame. You guys with me on that? Right? Or sorry, a candle closing in the range of a candle right next to it. And then we validate it on the medium time frame with an OC to the upside. This trade that failed had an OC to the downside. This trade that failed also to the downside. Now, what's the difference on the last one? Closes through, OC to the upside, and candle closing in the range of the candle right next to it. You see that? Right? It's going that direction. Now, let me take it a step further. When you see that, because it's fractal, you have a candle closing in the range of the candle right next to it, you ask yourself the first question, is it coming from a POI? Yes, it is. So you were on the weekly, you are now on the 4-hour, but because of this formation, OC plus 3 candle, you can go down again and go get it on the 15-minute. But on the 15-minute inside of the new 4-hour candle, right? What are we waiting for? We're waiting for a 3 candle closing in the range. A candle from a POI closing in the range of the candle right next to it. Here's a candle closing in the range of the candle right next to it. Here's your POI, 3 candle low, which you learned today. And then here becomes your entry. Now, that massive spot you had early on, you don't need as much of that, right? And this, of course, is just your basic entry, but the real entry should be over there. That's a safe one, right? And there you go, right? And it does it again. Now, why does this one move energetically like this? And where does it move energetically from? We got our OC, series of candles down, they got traded through. Then what do we get? A candle closing in the range of the candle right next to it. You guys seeing that? Right? Over and over. Every single time frame, and not just aimlessly from no place. You've got 3 POIs that it needs to come from: a low, an FEG, or an OC. There's your low. 3 candle low, candle closing in the range of the candle right next to it. And I know I won't be able to go lower down here now to the 1 minute to show you that it will fractal again, right? So I'm probably going to go to 5 minute. No, 6 minute, 7. Let's see if we can get it on the 7. On the 7, when the candle closes in the range of the candle right next to it, after hitting a POI, if it allows us, it might not give it to us because it's not the correct time frame. That's not a POI. And so that's also important that even if it works, it's not a POI. There's nothing there. And that's not this is also not an OC because it's not coming from a POI. Nah, 7 minutes not going to give it to us, I don't think. Let's just see. Okay. So we take out that low and we close in that range. Let's see if we get it there. This is not the correct time frames to be on, but let's just see what happens. Yeah, well, I think we're going to get stopped. Let's see. Yeah. And here's one of the reasons we get stopped is we actually created an OC to the downside there. I'm going to follow this through just for my veterans. I want you to see once we make an OC again, right? And there. Entry there, stop there. Let's see. Nah, the time frames are off, man. Maybe that would have still worked if you had a stop loss on there, but we're not supposed to be trading the 7 minute. But it would follow through if your time frames are correct because we'd likely get it somewhere here at the bottom on the way up. Anyhow, that's the concept, right? Questions, comments? Please unmute yourself at any time. We're looking at validations. Now, let me talk to you about validated OCs again while you're getting your question ready. Because this I know was a troublesome one for everyone. Okay, so here's your candle number 1, candle number 2, and candle number 3, right? And that to us is a master pattern on a higher time frame. In actual fact, I want to take out candle number 3 so you can see more of it. That to us is the formation of a master pattern on the higher time frame. When you go down from there weekly, you go to the 4-hour. Here's your criteria that you want to see, right? You want to make sure that you see on this side of the market at least 2 clearly defined swing points. We have much more than 2, right? Because that validates the master pattern. Then we trade from the midpoint of a master pattern, which is the highest point is there. So we wait until price comes through and creates an OC there, right? From that OC over here, that's a signal of reversal. Why? Because we were going up first, now we come down. If you want to be really safe here, you're actually waiting for this one. Why? Because remember what I said happens at turning points, right? You have to go OC up, OC down. That's not really an OC, that red candle there, right? Oh, no, it actually, in this case, it actually is. I had it covered. It is because of that hitting this OC, right? Once price comes through it, hits it again. Now we can go down longer term, right? And of course, we trade in session. So even though price is going up here, you're just waiting for it to correct again to go down like there. And then you're just waiting for that same scenario again. So you're waiting for the candle to close in the range of a candle right next to it on this respective time frame. So let's see. This one here would be your first attempt. What I don't like about that is a candle closing in the range of a candle right next to it, but not coming from a POI. We want a POI, right? Now we got a candle closing in the range of a candle right next to it. And the difference is we do come from a POI. So now I can short that one, stop above there, and then target lower. And this is why I cover the FEG. You'll notice me often do that with the FEG, right? This is a fair stop. This is a fair stop. Now we come back up and we do that. But I don't like this one. Who knows why I don't like this one? Because it's got an opposing OC now, right? It's going up. So I can wait, even though it's going to likely work, I can wait until I go down again. And that's why we wait, right? And now if I get a 3 candle again, there, that would be a valid shot, right? In an FEG, candle closing in the range of the candle right next to it. And we're obviously not working on precision entries here. It's just logic, right? So far. And then that would be my next shot over there for a trade down, right? This one, valid. This one, not, because we have an OC to the upside. This one, OC breakdown and a continuation. That's where we get it, right? To the downside. And as many a times before shown to everybody, if I was to go right there and do the same thing again and switch over to the 15-minute and wait for the 15-minute to produce an OC to the downside, which is here. I'm repeating these OCs in here, so those of you who go back to the classes, see me draw multiple OCs down. And now we wait for price to make a 3 candle formation from an OC. It's not going to do it. It's just running away. Might be doing it on a correlated asset class. Those are candles closing in the range of candles that are next to it, but not from. This one is. It's just barely touching it. Over there. Short position over here. Target down. And there we go. All right. Fractal over and over and over. So we're looking for that flow. Now, I'll add some more. You guys are not asking any questions yet today. I don't know what's going on, right? If we go to our daily time frame, especially our daily time frame, right, and you look at how price is developing, we get days like this, of course, right? That's usually when we hit a monthly area. When we get this happening, we hit a monthly area. Now, mainly though, what we see is if a candle closes down, the next candle goes down as well, right? Until it does what? Until it hits a POI. So why does this green candle go up? Why did that green candle not go down? Because I said every candle that closes beyond the previous candle is supposed to go in the same direction. That candle went up because we hit an OC on this side. This one hit it. Now it's coming up, but why did this one continue down? Because we hit an OC on that side, right? See where I'm going? Then why did we get this green candle? Remember what I said. It will follow the same direction most of the time based on closures until it's a POI. Why did this candle go green? Sweet a POI there. And also, as a note to yourself, never trade the candle that hit the POI, trade the one after the one that hit the POI. So this one hits the low. Don't trade anything in that candle. Let that candle close. Trade the next one up. Right? You'll see almost always whatever candle hits the high. This one hits the high. If you were trying to trade inside of here, you got chopped up the whole time while going up and down. But if you wait until that candle closed, you'd get this candle. Small wick, expand down, further down. Right? So, homework again, validate all those POIs and OCs and FEGs and things like that. So, for instance, this one over here, I'm going to show this is a good example. We might be inclined to come and say, hey, I got a nice OC here, right? But this is not an OC because that is not an OC. That doesn't hit anything, not an FEG, not a high, not a previous OC. So if this one goes into it, it also isn't an OC. What do we then have instead? We have a POI in the form of a high over there, right? That's what we got. Not that OC is the bottom. And magic, you see that? Why did it go there? Because this is not valid, right? So what does it reach for? The thing that is valid, right there. And then what does it do? Closes in the candle, goes in the range of the candle right next to it. This is a daily. The last OC on this daily is here. The last three candles to the downside is forming here. What is the validation time frame of the daily in last Monday's lesson? It's the 1 hour, right? What do we look for on the 1 hour? We look for an OC to the downside. So where's our OC? Our OC will only form here. Why? This is not an OC. Why? Didn't go into an FEG, didn't take out a high, and didn't go into a previous OC. You guys with me? By the way, newbies, OCs will be your nemesis. You will have no idea what I'm talking about for at least like until the end of this one. It's tough. That's why I'm repeating it the whole time. If I believe price is going down, the OCs or the candles are running up, right? But it's only the candles running up if they come from a POI. This one runs up, that wick hits that FEG there. So this one, right, could be an OC over there if this is a divergent swing, which you'll learn about later. Now, so what do I wait for then? I wait for a 3 candle formation to form from a valid area. So now I have to ask myself, if there was a high, it's not a high. I was hoping there was a high so I could explain this. But if there was a high, I can't just say there's a high, let me take it. I need to ask myself, is that high valid? Did that high take out liquidity? Did that high hit the POI? Did that high do something? You guys see where I'm going with this? So there's no high there. So no, I'm going to leave that one alone. Even if it works, I'm leaving it alone because there's nothing there. I'm waiting, right? I'm waiting. Is this high valid? It's an high. Did it come from POI? Now, I'm not saying this can't work. It can obviously work because you're going to have correlated asset classes and stuff. But you want to ask yourself all the validations this time around. Does it actually hit something? We're just waiting, right? We're waiting to see if something happens. Now, price is starting to come down. If we get below this, we'll have a valid OC. Let's see. There. Now we wait for a 3 candle to go in the range of the candle right next to it. At this point, Jeff is like, I would have been in right there on the top. Yep, we can above that eye, right? But I'm just trying to do high probability for everybody. Is Jeff here? Oh, he is, yeah. I was hoping I'll make a joke while he's here. I don't talk behind his back, right? We can talk behind his back in the next session, right? Next. I had to check if you were here, Jeff. Now, we hit the POI in the form of an FEG. We got candle number 1. Candle number 2 does not close in the range of candle number 3. So we want candle number 1 and candle number 2. Candle number 2 does not close in the range of candle number 1. Therefore, we want to make sure candle number 3 is red. After candle number 3 is red, we can take a shot here, but the safest thing to do would be to go down another time frame to look at a OC validation in there. Let's see what happens. Oh, and we get bitten. So we got 1 loss, but we now do get a candle closing in the range of the candle right next to it. Right? Again, from a POI as well. Let's see. And there we go. Money back, right? And then, of course, would there have been another opportunity? Yes, right there. Why? Because you get your OC to the downside and 3 candle formation. And inside of here on the 5-minute even, with the exact same rule set, there would be a setup right there. And I can't go to the 5-minute. Let's go 10. Can I go 6? I want to get as close to the 5-minute as possible. No. Okay, so it's not going to be accurate again because it's not the correct time frames. But I'm waiting for a OC to the downside and a 3 candle formation. There we go. Right? I can take this off. And it's fractal, right? Here's your OC down. There's your 3 candle over there, forming down. And then there's your entry. There's your stop. And then now you let it run. Right? Okay. Everybody with it? It's that steps over and over, over and over, over and over. Right? The easiest way to do this is to make sure you first have an OC down, then the 3 candle. Right? On any time frame. That's why I brought you guys that. And then, of course, just as I can't believe it's not a single question here today. Right? You guys obviously know how to trade. But then there's a last thing for my veterans. So newbies, what I'm putting in here, you guys must just watch it on repeat, right? But just as a last thing over here, if I was to highlight this area, as I go to Mr. Park after this, right? If I highlight that area, and it's supposed to be like a 5-minute. So what I want to see here is that is part of a 3 candle in the 1 hour, right? Or 3 or 4 candle for that matter. And here you can see. So that's 1, 2, 3, 4. And if that is true from a POI, which this is an OC, then that becomes a high probability trade, right? Out of that particular area. Mr. Park, you up?
Yeah, Coach Chadwin, great class today. I feel like I've been to the eye doctor. They always have you try 2 different lenses. Is this clearer or is that clearer?
Yeah.
And every time you go through it, it gets clearer.
That's
great
good.
class. But I had a question back on consolidation. You used a term I hadn't heard before, and I want to make sure I'm understanding. On the consolidation slide, you mentioned about stacking highs and lows.
Yes.
I think of stacking, I'm thinking on top of one another, up and down. But consolidation, you're stacking from left to right, right?
Is that correct? You're correct. So it's like that.
Right.
You're right.
Like a traffic.
That's actually not a term that I came up with, but you're correct. It's stacked sideways. That's a good clarification there.
But
Yeah,
third
stacked this
class,
way instead of layered on top of each other. Yeah. That's a good one, Park. Thank you for that. So that would be stacked highs, and then of course, this would be stacked lows, right? And the idea is that wherever there's a bunch of stacked highs or stacked lows, they situate a lot of liquidity here in the forms of stop losses. So we run them and then we go up, or we run them and then we go down, right? But good catch there, Mr. Park. Sideways stacking is not stacking like stay stepping, right? Thank you. Mr. John.
Yes, and a couple of those examples, you said the candle closed in the range of the candle next to it, but it sure looked like to me, in a couple cases, it was beyond. Is there a little more to that definition?
Which one? Do you have an example? Is there
It's a
one on
couple
here, perhaps?
back.
Let me go see. Are you talking about like? Let me find one. Why does this always happen when I'm trying to find one? Then there's nothing I can see, right? I want to find one close to what I think you're looking at. Would it be something like this, for instance, where it's not closing about in the range of that candle? Right? Would it be that?
Well, it was on the other side, but
so that's a
yeah,
candle
that
here,
red
and that
candle
candle closes above it.
It's kind of well, the
It's
red
over it.
candle closes at the bottom.
Okay, so you want one where
candle.
this is green.
Yes. Okay, you're talking about the green candle. Yeah.
No, I'm asking this one here. This green candle doesn't close in the range of the candle right next to it. Are you seeing that?
Yes, I see that.
Yeah, that's always been part of the course. In those situations, you wait for this candle to close red. This has to close down.
Okay,
and
but
if you're saying, if you may be concerned about this because it's closing beyond that candle, is that what you're saying?
Yes, that's what I was saying.
Okay, no, that's an age-old problem that I had. Whenever every cohort around, I say the same mistake. You guys are supposed to remind me. I do say, if you go back to the original videos, you will hear me say closing in the range or closing beyond the range.
Okay.
Right. So this is beyond the range. But I'm so used to just saying closing in the range of the candle right next to it that occasionally I forget to say or beyond the range. But yeah, this would still be valid when it closes beyond the range of the candle next to it.
All right. That's what I thought, but I just wanted to clarify that.
No, good.
Thanks.
Good. And thank you for reminding me, because I'm always going to be saying that closing in the range of the candle right next to it, because that's how I'm used to first seeing it. It's just a habit. But yes, the third candle can close beyond it. Even the second candle can also close beyond it. So even this example here, this is not above a POI, but if that candle closes down beyond this candle, that is also still valid to take the third candle over there. Right? That's also still valid. Mr. JT.
Hey, thank you, Coach. Question. So with the candle closures, like obviously determining the next day's direction or the higher time frame direction, does that work the same on Mondays?
So Monday's the smallest range. So Monday's going to chop you up regardless, right? Unless Friday was a very choppy day. So the answer is yes, provided Friday was sideways, right? And like a really small range candle, then Monday will perform like that. But generally, Monday will be the least probable out of all of those days.
Okay.
For that
yeah, that makes sense. So like in regards to like, let's say Friday was very expansive, then today, like you said, would be probably more choppy. So kind of take it with a grain of salt.
Monday is like the Monday becomes the range that price wants to take out to expand in where it wants to go. So you'll often see if Monday was really small, Tuesday will swipe one side of it and then it will go. That's why I always say 60% of the time or 70% of the time, 60, 70 really, the lower the week or the higher the week is put in on a Tuesday. It's because Monday is usually small, it gets swiped and then it expands after that. Does that make sense?
Yeah, it
So
does.
yeah, so you can, I mean, you can follow this along, right? Even on 4 hours and lower time frames. Let me quickly show that reset chart view. And I mean, you can afford to be wrong as well. So if I was to do this, and I'm not going to laser focus on it now, so I'll get a couple wrong, right? I'm going to zoom out and go random there. And reset. By the way, on choppy days, you're trading the Forex market. The Forex market is more forgiving for this. Just go to your cross pairs, your exotics, right? Go to your cross pairs. So over here, right? Price is closed above that high and closed above the candle next to it. The issue is that this high is a POI, right? This candle hit it. So I'm assuming possibly the next candle will go higher and pull down a little bit, right? Let's see if that happens. So you're anticipating just the next day's candle. So I anticipate, this is what I anticipated to do. Take out that high possibly and then pull back in. I can't draw that on the daily time frame like that. But we can hear what I expect, right? And this is obviously just looking at one time frame. If we were to look at more time frames, we can get a better idea. So let's see what happens. So it doesn't pull back as far as we want, but look what it does. Goes above the high and then pulls down, right? So in that, there would have still been a trade for you all the way down till inside of here before it came up there. Now we go above another high and we come down. We do, however, close above this candle, but it's into a POI. I'm going to expect the next one also to pull back and give a trade. There we go, right? The next one pulls down and gives a trade. But the next one goes into what? An FEG, right? And this candle hits it. So then I expect the next candle to be the one that expands because I don't trade the candle that hits the POI. So now I'm going to expect the next candle to go up. And there it goes up, right? So forget how it ends. There would be a trade for you inside of this expansion, up like that. Now, this candle's a problem because it doesn't close above that. Neither does it close above this. So that's a consolidation candle. So now wait, right? I do nothing in the next candle because I don't know if I'm just purely doing the daily now, right? This thing as well, again, now it does close beyond this one. So this candle I left alone, but I can reasonably expect that the next candle should go down at least through this low, possibly targeting that low, the next daily candle. There we go, right? It goes, hits it. And you might think, but that candle's green, but I promise you, inside of there, there'll be an opportunity to hit that, right? Then go. Now that that is closed up like that, strongly like that, we can believe that the next target is there. There we go. This first. And now you might say, but I missed that whole move. I guarantee you that's like an NFP or something you wouldn't be trading in any case, right? So you capture that run, which is high probability on the lower time frame. You leave that alone and you let it go and do its thing. Okay, so now it's a large expansive candle like that. So that gives us a little bit of, we don't know what it's going to do. This might be NFP, but if it's a NFP or FOMC or whatever it is, if that happened, took out a low and it's so much range here, it's likely going to pull up into that range again in the next candle. There we go, right? Now you capture that little move up. And then, of course, now we've got that where it's closed in the range of the candle right next to it from a POI. Ideally, I would have liked it to go beyond this low. Closed up above beyond that low will give me more confidence of going up. But I think we could get a short-term pull up till here on a lower time frame. And we're going up there, not there yet, but now, based on the ones that I showed you in the slide, this is that example of where it didn't quite hit that. So it's likely going to go up in the next candle. There. That run there, up, is what you want. Forget this, because a lot of this is happening after hours when you wouldn't be here in any case, right? You want to capture the high probability conditions. Now, this is, of course, just based on watching the daily candle actually do that, right? If you were to add your lower time frames in as well, then you get all of the other, I forgot to say what I was expecting on that one. This is inside of that candle, so it's consolidation. So whichever side of that candle it takes out, I'll trade the other direction. All right, now it takes out this, so we're going up. See? Now we close above that. That one came from this FEG, so that's already happened down. I think we're going to continue up in the next one. There we go. And this closes above that one in an FEG that's been used already. So I think we'll go up again. But we already have 3 candles in one direction. So after that candle, likely we go down. Oh, wait, I said that wrong. We have 3 candles in one direction. So we should go down in that one. So we go down, right? It's an OC here. If it does, in the next candle, likely up. We hit it down. Let's see, up, that's a small up. And possibly another up, and I'll cancel there, right? See? Mr. Brennan, go for it.
Yeah, thank you, Coach. When you say you take the trade in session, my question is just like, are you talking about a specific trading session throughout the day? Are you like, is it like, are you talking about like the New York session or London session or something like that?
Good question.
That we should ignore other sessions?
Yeah, so I only ever speak in New York time, right? So even though I'm in South Africa, I never reference South African time. I only speak in New York time. For the numbers I'm going to give you now, then all you need to do is go back and just put it on in your chart. You can see my chart is in UTC -5, which is always on New York time.
Okay,
right?
yeah.
So the times that you want to trade, your highest probability conditions for trades are between the windows of 2 to 8 a.m. Sorry, 2 till, what am I saying? I'm trying to, because now I am thinking in South African time in my head here as well.
I'm also South African time, so that's why I want to get it right.
So it's 8 a.m.
Yeah, 8 a.m. New York, yeah.
Yeah, till 11 is where you wanna get that high probability condition trade. You can stretch it till 12 if you're on the futures market. And then you can also look at 2 till 5 a.m. New York time. And then there is 2 p.m. till 4 p.m. New York time as well. Right? So those are your high probability conditions.
Can you just repeat those other 2? Sorry to disturb you, yeah.
Yeah,
so
which
it's
one?
8 a.m. to 11 a.m.
Yeah, and then you can go 2 till 5, sorry, 2 till 4 p.m.
Yeah.
Right? And then 2 till 5 a.m.
Okay, thank you very much.
Those are all New York Times, yeah. So those are high probability conditions. But then if you want to use the scalping conditions that come later in this class, and then that is inside of the Just Like Clockwork video series, you can really get a trade every hour. So JT, that even answers your question about sessions. You can even get a trade every hour or every 4-hour candle, understanding the open, high, low, and close, right? And then checking if you've got that swing point validations on the lower time frames. But you can position around a specific 4-hour. Like if you wanted to trade this 4-hour, you'd simply wait till it takes that low, turns around on the 15-minute, then take that, right? So you're trading the expansion of that one particular candle. But again, I showed you guys, and I got some of them wrong, but there was at least 70% of them right by looking at where the candle closes, right? And you could do the same thing. Like the next one, likely going to go up. Why? Close through that FEG, and there's a high that's targeting there. Let's see. If it goes down, almost certainly, because I was wrong on that one. Of course, the last one I do will be the wrong one. But if it goes down, most times, right? Then on the correlated asset class, this is for my advanced people, that high has been taken. So let's go check on GBUSD. I'm going to replay it to that point again. And then we play that one candle out. And now let's go. Oops. Let's go look. Oh, we missed it on both. I'm wrong. I'm just wrong on that one. I would have expected it to go because we missed it here as well. And we should have been at least there on that one. No, so that's a fair wrong. It's probably happening on a different time frame here at this point that I can't see. Yeah, that's fine. Okay, so that's basically it. If there's no other questions, homework is due on Friday. OCs practice that more than anything else, right? And now I'm reprogramming you guys to see more and more an OC plus a 3-candle formation, right? Is key. Let's see if we can see it in this, right? Let's see if we can see it in this kind of setup over here today. We would have had likely an OC, and then I'll end an OC here, right? And a 3-candle formation there. And you'll be saying, but it went down. That's why I gave you the other rules. This is for the little bit more advanced people here. What do? You put on the 50%, right? That's a daily. You go to your 1 hour. We wouldn't be trading that high in any case. Go to your 1 hour. How do you get kept safe? If we close to that 50%, no trade. Bang, no trade, right? That's that rule that I give you later. So you guys will learn that as well. And then if we couldn't get it from that time frame, let's see if we could have gotten it from another. Where is our sessions? Over there, right? Here's our OC to the downside. There's our 3-candle, right? Closing in the range of the candle right next to it. Where's our nearest target? Over here and over there. There's the setup. OC to the downside, 3-candle from a POI. Everything you need on the actual 15-minute. Sorry, on the 4-hour. Go to the 15-minute, right? Inside of the new 4-hour candle. We wait for the 3-candle to the downside. There's your 3-candle OC. Sorry, there's your OC. Why? Because it comes from an FEG. There's your 3-candle to the downside now forming from a POI, which is a valid high. Why is it a valid high? Inside of an OC there. Coming there, 3rd candle is the red candle down. Give a little bit of room. Right. And we just targeted up, but you could possibly just gone like that. We also don't know if this is the weak or the strong acid, right? That's coming later. But goes down overall. And then applying the session aspect, we'd only get in this trade here. So they would be safe in any case. The session starts here, which is 8. To Brendan's question, there. What else do we get? I'll end off with this. Take out that eye. Candle number 2 doesn't close in the range of candle number 3, so we need a red candle down, which we get over there. All the criteria met and followed places us here with an entry, there with a stop, and then the rest, as they say, is history. Right? Follows the process to a T. And then, of course, to prove again, there's another 1-minute entry right there. OC, 3-candle. That means right there should be a 1-minute opportunity inside of that 15-minute. Let's check with the exact same framework of an OC and a 3-candle. Here's your OCs. There's a bit of a consolidation. Let's wait for the 3-candle to form. There's your 3-candle. Entry. Stop. This is a consolidation. Go a little bit higher. And there we go. Right? It's terrible when you do it like this because then it looks that easy, right? And you wonder, why don't you just follow that whole process like that to a T? But this is when emotions are not part of it. We all know this. We've been trading for long now. Once the emotions get involved, you start seeing 3 candles and OCs at every corner. right? But the principles work. If you practice it long enough, over and over, just be patient, wait for it. Make sure that those two criteria that I say, struggling with knowing whether or not this should be the time frame that you're on, OC and a 3 candle must be on the time frame you want to trade. And if you bump it up one time frame, if they're part of a 3 candle on a higher time frame from a POI, it's likely going to go that direction, right? Okay, everyone. Thank you. You guys be blessed. Have a wonderful day further. And
Thanks,
I shall
Coach.
see you in the homework and inside of the tests area, right? See you all.